Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, April 19th, 4:58 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's edition of the Revere Market Insight video. Let's get right into it. State of the market, we're in a consolidation. Check over here at the trend gauge right away. Little bit of an upgrade today from some of the red sub arrows that had been pointing from neutral to bearish for market leaders, short term and medium term. But a strong day today has reversed some of that, as several of the five major indexes that we track in these videos either tested or got back above their 21 and their 50-day moving average, but there's a big asterisk on that. Long term, we're still under the 200-day moving average, and that big asterisk goes to what happened today. Strong day across the board, but after hours Netflix down 25% on just a pathetic earnings report. So the question is, how is that going to carry over to or give insight into consumer confidence or lack thereof? It's already hitting the Nasdaq 100 after hours, as that's down about 0.8%, and the S&P down about 0.4%. So immediately some of these numbers are reduced. But regardless, it was a strong day today. Basically, though, we just went from the bottom of the range, the recent range, to the top of the recent range. Let's check the numbers. Growth, the G6 index up 2.3%, S&P up 1.6, Nasdaq up 2.2, Dow up 1.5, midcaps up 1.5, Russell 2000 up 2%, 60/40 global stock and bond up 0.48%. We underperformed, one of our biggest underperformance days in a while. We've been focused on cyclical / commodities, have about 8% of the portfolio in gold and silver, and they had pullback days, and some of the other things were in broad in healthcare and value type sectors. We're on the weak side for today. We'll take a look at the charts momentarily, but really all this does is give back some of the gains that we've had last week. Really not that big a deal. No danger done to the charts of anything that we own, with the exception of GFI, and we'll review that momentarily. So let's dig into it, and let's start off with, well, before we start off, let's get into the team here at Revere. Trend following is what we hang our hat on, monitoring the direction of the market and the sectors within the market, participating in what's working, getting out of the way of what's not working. And if you're interested in this approach, email any of us, Dan, Tim, Hunter, Muriel, or Don at revereasset.com. Or if you call, you'll get Danny, 855 Real Wealth. That's 855-732-5932. Let's start right off with this chart of Netflix. And you can see Netflix hasn't been a leader since it rolled over prior to its last earnings report. So here was the earnings report in October, made higher highs after that. While the market was trending higher, it topped at 701. The market went on to make higher highs, but Netflix rolled over, and this was really two big key days of selling here, 11:30 and 12:1, where on above average volume, it broke below the 50-day moving average. If we were in it at that time, that would have been our signal to get out of it. You can see while the market got choppy in December, Netflix underperformed. Look at this blue relative strength line, and also note that the relative strength line did not make a new high on 11/17 when the stock did make a new high at 701. That immediately tells you that it's starting to underperform versus the broad market. And then you can see people say technical analysis doesn't work. Well, this 21-day exponential moving average sure as hell did work, capping any rallies that it attempted to do throughout December, which was while the market was rallying in late December. Netflix couldn't get above its 21-day moving average. Came down early in the year, and 2 days just cut right through. No support here. This is a big red flag. No support at the 200-day moving average if you were a longer term holder. So at this point, there was a lot of people starting to talk with, well, opening back up. Netflix was a COVID play. we would expect to see some weakness, but I'm not sure anybody expected to see the weakness on its 120 earnings report when it gapped down 22% on massive volume, over 1,200% above average volume. I saw some supposedly smart people on TV saying that they were buying that dip, and you had 2 days here where it rallied toward the end of January, but again, could not get above this declining 21-day exponential moving average, and it very quickly then gave up those gains, broke below the low of its gap day, which is a big red flag. Still unable to get above. Now the market starts rallying the beginning of March, and we get back above the 21, come up to test the 50. That's the red line. Poked its head above it, but failed as the market weakened. And now today, on its earnings report, volume's going to be massive tomorrow, and you can see up here down 25%, down to 262. That's 62.5% below its 701 high from back in November. I believe that was the all-time high. Let me go to the weekly and check. Yeah, that was the all-time high. So a lot of people say, you just buy the best stocks and you just hold on to them forever. Well, if you're holding on to Netflix, you made some really nice gains. Let's look at a monthly chart at it. Netflix on an amazing run, but no matter how much you made, you gave back 62% of that off of the highs. So we obey buy and sell rules that we've developed, and based on the studies that William O'Neill and Investors Business Daily have developed. And quite frankly, Netflix hasn't been a leading stock for 5-6 months since it broke below the 50-day moving average. Back here, it broke below the 200-day moving average before doing a little bit of rallying along with the market. But if the prior earnings report wasn't the death knell, and you didn't take enough of a beat down, being down 22% on a gap down after it was already down 200 points off of the 701. Maybe you're just a glutton for punishment and you think it's a great value here, being down another 25% after that. But that's not how we play ball here at Revere. We're trend followers. Something's going up, we're happy to be in it. But as far as we're concerned, all stocks are bad unless they're going up. So enough about Netflix here. Let's go to the S&P 500 and break out the tail of the tape after I reviewed that little chart review as to why really nobody that follows the type of the process that we have here, or the William O'Neill process, nobody should have been caught in this big Netflix gap down. Certainly, you should have got out after the last one. But anyway, so here's the S&P 500, and what happened here basically is take a look. Let me do a 15-minute chart here. So here's the prior range, and we gapped down below that back on April 11th, right? Tried to get back into that range, quickly failed, bad day on April 14th. So this is the range that we've been in lately, 43.70. I've been saying, 43.85, but we poke our head below 43.85 a little bit to 4,400 has been the support area recently. Tried to get back above it yesterday, failed back below it. But this, even overnight, this range held. We kind of rallied some overnight, but off of the lows, 43.70. So opened just about flat, and what we did is get back to the top of this range, closing at 44.62. So we've gone from the bottom of the range back to the top of the range in one day, and this is a failed breakdown below this 43.81. Yesterday, when we broke below several times, we got off of our long our SPLG position, long S&P 500 on this breakdown. By the end of the day, it recovered some of it. We were right where basically we opened unchanged today, up just a tiny bit, but a very strong rally out of the box. So we got off the long side and onto a short side with this breakdown using SDS. And as soon as we saw strength, we got rid of half of it. But then in about 15 minutes, we were all the way up 1%. So now at that point, we're at the top of the range. It makes more sense from a risk reward standpoint to hold on to that piece of the directional short unless we break back above this resistance area up here around 44.70, which coincides just above the 21-day exponential moving average, which has pretty much held. Go back to a daily chart here. The 21-day has contained this consolidation over the last 2 weeks. So one close above it, but as I mentioned, let me flip this to SPY because we can get an after hours quote on SPY, down 0.42%, so back below the 21 now after hours. Don't know if this is going to have a broader reaction to the market. It certainly is to the Nasdaq 100. Down 0.9%. So let's go right to the Nasdaq 100 chart here. Also had been in a trading range here. Also had a false breakdown through that trading range. There was a big Fibonacci level in here, 338.22. And that was a retracement of the recent move up that we had off of the lows. False breakdown here, but right back above it. You know the saying, from failed moves come fast moves. Well, we got right back to 347 within a day, very similar to the rally that we had last Tuesday, which was then undone on Wednesday and Thursday. Friday we were closed. Actually, it was this day. It was the 13th. Here was Tuesday, the down day. It was recovered on Wednesday. Let me just double check that. Yep, Wednesday was the big up day. Then Thursday, we gave it undone. Very choppy day yesterday with the false breakdowns below the recent support level. Strong day today, 10 of 11 sectors up. But let's see how this, if we get any kind of a hangover after hours. After hours, we are having one. Let's see if it stays put through the night and into the open tomorrow. So that's what we're going to be watching. You can see this convergence of the 21 and the 50-day here on the Nasdaq 100 acting. We got right up to it, backing off of that again after hours on this Netflix reaction. You know what Netflix does impacts what how Amazon trades, which has a bigger impact on the Nasdaq 100, which pulls down all the big Nasdaq 100 type stocks. Like for example, Tesla's down $10 after hours. Does that have anything to do with Netflix? No, but it has everything to do with the Nasdaq 100 trading lower and it being a part of the Nasdaq 100 index. And reminder, Tesla has earnings after hours tomorrow. So there's the Nasdaq 100. Let's go to the Dow Jones Industrial Average to see how that did. Nice relative strength over the last 2.5 weeks, right up in here to the 200-day moving average around the 35,000 level. It's down not quite as much. Let's check the DIA to see. Netflix isn't in the Dow, and neither is Amazon. Only down 0.2% is the Dow Jones Industrial Average after hours. Let's go to mid caps next. MDY back above the 21 and the 50. Not given much back after hours. Let's see, the mid cap quote is from 488. Yeah, there's a big range in there, so no action after hours on mid caps. But we did buy this MDY today when it moved up through the 21 and the 50-day, and it continued higher. So we've got some green in that trade right away. Let's go to IWM small caps. Right into their declining / flat 50-day moving average and 21-day moving average. So again, the key tomorrow, the thing we'll be watching is, does Netflix impact some of the consumer sectors, and how does that impact the overall market, especially tech stocks? So let's look at the tail of the tape here now. Same headwinds. We haven't changed these in a while. Put call right around 1 where it's been hanging. The VIX around 21. Fear and greed is neutral. So right now we're operating under the bear case because we had a 414 confirmed failure of our bull case when we went back down below the moving averages. Yesterday we had a false breakdown, as I mentioned, and reclaimed that. So we're working back on the beginnings of this bull case here to see if we can reclaim the moving averages. But again, we're going to need some more information on what happens in the market tomorrow. Some news today: the court struck down the travel mask mandate, and the White House and TSA won't fight it for now. So if you're sick of traveling and wearing a mask, you don't have to anymore. So what we were watching coming into today was our support down at this 4385 to 4400 area. We tested it, support held, and we got back above this resistance area, the 21, but we're back below it after hours. Nasdaq 100. Support at that big Fibonacci level, 338.22. We broke below it, undercut and reversal, just like we did twice yesterday. So false breakdowns, that level held. And then at the end of the day, we were testing into this 50-day moving average on the Nasdaq 100, but we're back below. Again, that's 347.30, and we're back down to 343 after hours. So for now, that resistance holding. The action today opened just briefly, strong overnight, but flat by the open. But then we had a strong rally up into 1050, as I showed. That's when we covered half of our directional short. We consolidated into after 3 o'clock before we broke out intraday, but then a very volatile close. Let's take a 5-minute look back at the S&P 500 so you can see what I'm talking about. Here's your strong open. Up to 1050, then we started going sideways, and then we broke out here around 310, 315, and extreme volatility into the close here. But again, for some perspective, let's bring out this bigger chart. So this has been the trading range that we've been in for the last week, a smaller trading range, 3-day trading range here, off of the breakdown from the highs of 46.30 after the nice rally up off of the lows. Again, this is on the S&P, a 50% retracement is this 4,400 level. The shakeout yesterday, and get back above it, and let's see what kind of follow through we get tomorrow, if any. Do we reclaim? Is this pullback that we're showing right now about 0.5% after hours? Is it nothing, or is it going to be something? That's a pretty fierce reaction to Netflix, considering that it already gapped down 22% on its prior earnings report. So bottom lining it today, broad rally excluding energy to the top of the recent range. Let's take a look at what we have in-house. Strong sectors today were builders, a little confounding because interest rates were higher as bonds were down, but oils were weak all day, as were gold, silver, and gold and silver stocks. Commodities, coal, fertilizers, everything that's been strong recently was weak today. 10 out of 11 sectors up, excluding energy. Retail strong, banks strong. So I talked about how we trimmed our STS. That was our directional short that we took with the breakdown. When the breakdown failed, got rid of half of it. We added to our CrowdStrike position, CRWD, as it got back above this 200-day moving average, closed right on the 200-day. Tested the 21 a couple times twice over the last 2 weeks. Strong move. Look at the volume patterns are one of the most attractive things about this. We recognize that there's some overhead supply over here on the left side of the chart, but they got some news about being approved for the U.S. and the federal defense departments, and not a good day on Monday for this, breaking back below the 200, but reclaiming it today. Not really much volume, but the risk reward is there for it. Now let's take a look at the things that we own that were down today. Giving back some of our gains on Chevron, not much, just at the top of the range. That's fine. They've got earnings in 10 days. Oxy, OXY, another oil stock. We got a half size in this one, giving back some recent gains. We're still positive in this, but the one that really hit us hard, GFI. Now, it was only a 2% position because it's one of the more volatile gold stocks. It actually had the biggest gain when we were looking to get into a gold stock, the biggest gains from this breakout on 211 of all the gold stocks, consolidating on lower volume. Really nice move yesterday out of this range, but note how it stalled midday along with the rest of the gold stocks as it tried to get above this 1720 prior high. And then all gold stocks down today. This one down 11.6%. a close just below the 50-day moving average. We're giving it one more day. Make sure if today's lows hold, we'll see how it responds on the back up. But if today's lows don't hold, we'll be out with still less than our 0.2% loss threshold that we set for individual positions. Let me show GDX. You can see the reversal on all gold stocks as they tried to continue their breakout. Reversed on Monday, and not a good bar on Tuesday, breaking below the 80 MA. But all in all, the GDX still above the 21, and volume wasn't heavy. Let's look at GLD itself, the metal. Again, another reversal. Didn't make highs from this big Ukraine-induced panic, but pullback, and gold is sitting right on the 21. So other things that we own, XLV, healthcare sector, pullback, one close under the 21, back above it today. Nice volume patterns on this. Underperforming though over the last week and a half after having some nice outperformance. We also own SPYV, the value half of the S&P 500. Very nice consolidation here above the 21 as growth had been underperforming value, but SPYG had a good day today. But you can still see the quite a big difference between what the growth half of the S&P 500 looks like versus the value half. So again, tomorrow the key, we're going to keep an eye on what happens to these areas around the moving averages in this recent range that we've been trading in. With today being the top side of it around 44.70, the downside being yesterday's low 43.70. You've got some moving averages in here that'll come into play. Let's see if we just continue to consolidate here and maybe continue to build the bottom of the base, round and come up higher, or if we just follow up on this false breakdown that we had. But remember, from failed moves come fast moves in the opposite direction, and that's what we saw from the close yesterday through today's action. See if there's anything else here that we want to, on the tail of the tape, that we want to pay close attention to. Not really. So we're still under the 200-day moving average on the big indexes. And let's take a look at a couple of stocks that acted well today and some things that we were possibly considering. Bros, a growth stock back above its 21. SI Silvergate, this is a crypto bank, lagging recently, but up 121%, up 13% on its earnings report. Very nice numbers, very nice fundamentals, but paused right at its 200-day moving average. You can see I've got an alert set above today's high to see if we get a change of character in Silvergate. Again, we're always looking for growth stocks because they do outperform when the winds are right for them, and as of recently they have not been. But there are some things that are acting well in growth land, Lulu being one of them. Got an upgrade today above the 200-day moving average last week, gap up, and it held most of the gap today on above average volume. Lulu certainly looks pretty good. MP, rare earth metals miner, came back, undercut the 50-day moving average today, got back above it. We're watching to see if this can hold, as they've got very nice fundamentals and are going to play a key role in the EV sector with the rare earth. The only U.S. rare earth miner of any significance is MP. Let's take a look at Tesla before it has earnings tomorrow. Nice move out of this consolidation back above the 80 EMA and the 21 EMA, down 1%, as I said, after hours, which is just because it's part of the Nasdaq 100 index taking a hit as part of Netflix. So that's going to wrap it. As always, love to hear some feedback from you. You can email me, don@revereasset.com. If you hit the phone, you'll get Danny. That's at 855-REAL-WELL. So wrapping up Tuesday, April 19th. With just the facts. This is Don Vandenbord. Thanks for listening and have a great evening.